Hello everyone, welcome to my channel. Today I'm going to talk about the tax benefits of an LLC. Before I get into the video, be sure to subscribe and leave a comment below saying I subscribe. I will try to personally reply to your comments. Let's get into the video. A limited liability corporation, sometimes known as an LLC, is one of the most common business structures. LLCs require less paperwork than C corporation and S corporations, while providing some of the same safeguards against personal liability for the company's activities. The main value of this title, however, is in the form of tax advantages. LLCs provide much more federal income tax freedom to business owners than a sole proprietor, partnership, or other common business structure. What is the major tax benefit of an LLC? The term pass-through is used to describe how an LLC is taxed. This is the method by which the LLC's earnings can be transmitted directly to the owner or owners without first paying corporate federal income taxes. Pass-through entities such as sole proprietorships and partnerships pay taxes as well. These firms do not pay any federal income taxes. Instead, its gains are distributed to their owners, who are responsible for paying taxes on them at their individual income tax rates. This is in contrast to traditional C corporations, which are taxed twice. The firm, in particular, must pay taxes on its earning. Any payout to the company's shareholders are then taxed as individual income. Clearly, avoiding double taxation can save a lot of money over time. One of the most significant tax advantages of an LLC is this: tax flexibility of an LLC. The Internal Revenue Service (IRS) permits business owners to choose how their company is taxed, which is an important element of an LLC. They have the option of being taxed as a sole proprietor, partnership, S corporation, or C corporation by filing IRS Form 8832. You can choose how you will be taxed. The aforementioned options have various limits. An LLC with many owners, for example, cannot choose to be taxed as a sole proprietorship. If an LLC has more than one owner, the IRS will treat it as a partnership. The tax options an LLC has: filing status, sole proprietorship, how income is reported. If you choose to form your LLC as a sole proprietorship, you will have to declare any profits and losses on your personal tax return. You will need to file a Form 1040 individual tax return as well as a Schedule C business profit or loss statement for the LLC. If the filing status is S corporation, S corporation have to file Form 1120S, but they do not have to pay corporate taxes on their profits. Next, if the filing status is C corporation, how the income is reported. You will need to file the Form 1120 corporate tax return if you want your LLC to be taxed as a C corporation. Rather, the LLC shareholders declare their proportion of income on their individual tax returns. This eliminates the need for double taxation. The corporation will be required to pay a profit tax. Members will declare any of this income that is passed on to them as dividends or interest on their individual tax returns and pay taxes on it. It's worth noting that if the C corporation does not transfer part or all of its profit on to its shareholders, they won't have to pay tax on it. The next filing status is multi-owner partnership. How income is reported on this? The LLC will file a partnership return on Form 1065. Each owner will pay taxes based on their part of the earnings or losses, which will be reported on Form 1040 and Schedule K1. Tax limits of an LLC. It's vital to remember that forming an LLC does not imply you won't have to pay taxes. You will still have to pay your regular individual tax rate on the LLC's earnings. Depending on how you set up your LLC, you may not have to pay company taxes right away. Income from an LLC is not subject to withholding, unlike pay from an employer. As a result, you will have to file quarterly anticipated federal income tax payments. Some state taxing authorities may also get involved by levying a direct tax on LLC profits. Some businesses, on the other hand, charge fees for LLC. While you may be able to deduct the cost of forming an LLC as well as capital expenditures such as materials and equipment utilized by the business, there are some restrictions on what you can deduct. You may not be able to deduct benefits such as health and life insurance, which you may be able to do if you form a C corporation. You may have to pay taxes on these types of benefits if your LLC gives them to you. Limited liability corporations, the LLC, allow business owners to choose how their profits are taxed at the federal level. You can also put them up for less money and with less difficulty than, say, a C corporation. Furthermore, they provide proprietors with some of the same liability protection as corporations. If you are thinking about how to structure your company, an LLC could be one of your possibilities. Thanks for watching this video and do not forget to subscribe to my channel.